Can you hear me now? Oh, we got an audio. Yes, we got an audio problem. Right, so that's getting unplugged. Right, the audio is coming from the camera, so it won't be as clear as we've just done. Let me just reorganize. That's trouble with working from the home office on a Friday. I don't know how many of you are still here, but that should be now working. And sorry, Hamza, can you hear me? Market Maker, I don't know if you're still here. Can you hear me? Hope you can. That's where we are. So if you're still here, if you dropped out, I don't blame you. I understand. But be interested to see where you are. Yes, now voice is okay. Hamza, okay. It's not great because it's coming from my webcam. Actually, it's not, and it's not a fantastic. It's not the best webcam, to be honest with you. I've got a really nice microphone, but obviously not working. So what was I saying? Yeah, dollars week basically. There, that 3-week rally. It's been hammered this week. So across the board as well. If you look at Swissy, big down week. There's that 3-week uptick. Sterling cable, massive, even bigger move for cable. Relatively weak move, but cable's really in demand, and that was our extended that spike we talked about 2 weeks ago. We went to 135.70. That's the next upside target for next week for cable traders. Aussie has also had a really strong week against the weaker dollar. Big old candle. There we go. So it didn't weaken as much, or the dollar didn't strengthen as much against the Australian dollar, and smashed through 68 this week. As we said yesterday, we've not been up this high since October 2024. Just marking, we only held it for 3 weeks, but we did get as high as 69.40. So watch that. We're already at 68.60. So massive move for the Aussie this week. Look at the daily, helped by the strong jobs numbers yesterday, and the weakening dollar continues. That story continues. That obviously helps lift the gold and the commodity prices, which is where everybody shifted to, and they've been selling these treasuries as the yields have gone up. So that's where they've been the major beneficiaries. Oil obviously in play, 61.82 for WTI. So it's had a stronger, another strong day today following Wednesday's move through 60 and the retrace back down yesterday. And again, this is still, you can't argue that this is positive. Positive from a technical point of view. We're now in the upper half of the Bollinger Band now since the 8th of January. 20-day moving average, the big support zone. We've got an angle now, a clear angle up the top. We had this compression here on the 8th as we had this breakout. On top of that range, remember we talked about 58, 50, we'd like to see it go high, and it did, followed through. And now that breakout at this area here, this zone we talked about during the beginning of the end of December, beginning of January, is now our support area. And interestingly, it's below the 20-day moving average now. So strong day today. See where we finish for the day. The peak spike went to 62.35. So that's the next upside target. Top of the Bollinger Bands at 61.80. Whenever that's intraday spike from the 14th is the next upside target. As you can see here on the end of day basis, if we look to the left, we're above this cluster here from the end of October, middle of December. So that then corresponds. If we look further to the left, these 3 days here, 23rd to the 27th of October, corresponds to this spike through here. So let's just put that little ray in there. So this top of end of day stuff here corresponds to this. Put a little dotted line. This cluster level here. So that's definitely, you can see that's the certain, if you're looking for targets upwards next week, top of the Bollinger Band 61.80, and that end of day resistance we got there for 3 days in a row at 62.10, just over $62. Can we hold it? It's looking relatively okay. Brent 65.70, similar pattern, a bit stronger for Brent, but there you go. See that intraday takes us back here, so it's a little broken down. The top of that cluster there, that 24th, 23rd of October high, is now corresponding to the top of the Bollinger Band at 66.60. and that intraday spike on the 14th of January went to 66.98. Call it 67, so 67. Next big line in the sand for dirty old Brent. So there we are. On the energies market, crypto has had a weak week. Old Billy Bitcoin down again, 88,900. So we're under 89,000 now today. These are the daily time frames. So down today, down yesterday, bounced on Wednesday, big down Tuesday, big down Monday, sideways over the weekend. But obviously the key, we talked about this all week, haven't we? Under 95 and then under 92 on the big move on Tuesday, and under 90. Some buys at 90, but we'll see. So Trump speaking has been a bit of a flaw for crypto. So let's just quickly go back to the calendar because we've got this key data. Hi, Mr. Sadir. Hope you're well. Hope the voice is okay because it's just come from my camera, so it's probably not great. But anything you're trading, anything you want to have a look at, any time frame, any strategy, any system you use, let me know. Whether it's mean reverting, trend following, whether it's just pure price action. You got no lines on your chart, no indicators. You're an SMC aficionado. Let me know how you're getting on. I'm here to help you. But if you don't, if you find this helpful, obviously, yeah. That's your call. So where was I? Yeah, I was going to go back to the calendar, wasn't I? Which has disappeared. There we are. So where are we? Friday. Right. I've said the other data we've had this morning: the strong PMIs out of Europe. Bank of Japan. Press conference in particular spiked the marks. No change in the interest rate because of the election more than anything, but chatter up and the fiscal expansion that she's wanting to do. The new prime minister in Mr. Takaichi in Japan, if she gets the mandate she's after, will that's what spooked the yield, the long end of the JGBs, the Japanese government bond market, about the fiscal responsibility, which is what Japan has been renowned for decades and decades, but it's also been moribund for decades and decades. Poor old Prime Minister Abe tried with his 3 arrows, 4 hours, what was it, of economic expansion. It just hasn't worked. Whether this is going to work this time around, Mrs. Takaichi, a much harder proponent of free markets and the right wing, both politically and sort of economically. Big fan of Reagan and Thatcher from the 80s. So we'll see what she can push through. Quite strict, rigid, structured market in Japan. Employment laws and all the rest of it. So anyway, the other good news today has been the retail sales numbers out of Canada and the United Kingdom. And the United Kingdom in particular caught my eye. A big 0.5% rump. We declined previously in the December data, but obviously shoppers have been out either for the sales or for the last minute Christmas buying, because it's a big surprise coming at 0.4 of 1%. Doesn't look much, but that's quite a positive tick for the UK economy. Retail sales. So again, those with jobs, those with getting bonuses have been spending it over the Christmas period, and that was reflected in the perhaps reflecting the strong services PMI reading at 54.3 earlier. So anyway, whilst I've been talking, as usual, we've missed the consumer sentiment. It's bounced again, so that's a positive tick for the administration. The consumer sentiment. I wonder what the inflation. Sorry, let me just change the inflation data. Apply filter. So. Just do today for now. So we just apply settings just for today, Friday. So the consumer sentiment is coming at 56.4, as just said. And interestingly, inflation expectations have actually dipped from last month's 4.2 number. So again, that the disappointment has been the S&P services number missing quite significantly 52.5 from 52.9. So if we look at this consumer sentiment, it's been remarkably resilient. That's what everybody's been talking about, the resilience of the US consumer, showing signs of weakness during the spring, spiked up again. Obviously, this is the April number was around the flurry of the tariffs, spiked up and then moved down. Today's voice is better than previous day. Okay, so perhaps the microphone's not working as well as I think it was, Hamza. Thank you for that, Hamza. Appreciate that. So, because it's only coming from my camera, it should be a better quality from the very expensive microphone I've got sat next to me. Mr. Sabir is asking, how do we identify, let me just read this out for a minute. How do you identify the liquidity on stocks that price willing to grab? Not quite sure what you mean on that, Sabir. If you mean volume or liquidity around, are you talking about individual stocks or the stock markets? I mean, the beauty of trading the stock markets is obviously they are, they're exchange driven, and when you're trading derivatives with prop trade companies like us, that's and you can trade it near 24 hours a day, but obviously the stock markets themselves aren't open. Let's look at the indices, aren't open 24 hours a day. NASDAQ aren't open 24 hours. Let me get a different layout because this is all. Let's just use the VWAP one. This is it's 15 minutes. Sorry. So when you say volume, you can see here this is just Heikin Ashi candles on the Nasdaq. So you can see clearly here the Nasdaq's had a really strong run, and we're in this range now. But the range is compressing, so we've got a bit of a wedge. So we're looking to break out. There you can see this quite nicely on this, can't you? If we put the our trend lines on there and our legs, so there's the the high, there's the wedge, the highs, and oops, I am terrible at drawing trend lines. I always have been. It's not something I was good at when I was younger. It's just I just rubbish at it for some reason. And then doing it live with you guys has always been a bit of a. Actually, that would have been there. So that's broken out, you could argue, this week to the downside. So we'll see. But anyway, you can see that. There you go, wedge. So, that's patterns that we're looking for. If you're looking about liquidity, if we put volume in as an indicator, and again, you can use that and directly from the stock market, there's exchanges, but you need a feed from the exchange, and obviously costs a lot of money to do that. And when you're trading with brokers like ourselves or CFD brokers or futures brokers, they'll give you the sort of derived volume. So you've got to just treat it with a little bit of a little pinch of salt. But you can see heavy volume is heavy volume. See massive volume there on the 21st of January at the end of this big down leg we'd had following Monday. This is Friday. You tend to get bigger volumes Fridays as well. The following Monday, the 24th, was an up day, and we closed towards the top end of when we got. So that then triggered a big old uptick here with the Heikin Ashi candles. This is so you can see the legs are waning. See what's happening? Big down, up, down, lot shorter leg, much shorter leg, up leg, up leg. So it's a classic 1, 2, 3. If you're Elliott wave, mental age always below actual. Okay, not sure what that means. Mental age always below actual. I don't know. Are you talking to me? So that's a big volume day. What do we derive from it? Well, it was a down day. That should have, was that buying? But we're not saying that was a sell day. We had big volume the following day, but it was a weaker buy. So it suggests after those 2 days that perhaps the trend might have been slowing down because the body of the candle is much smaller. And then the surprise was we had lower volume, but a big uptick closing above where we'd been the previous 2 days. So that's a positive, very positive candle. There's no wick to the south, having been a positive move down for 2 days. And this is obviously this week, that's all been related to Trump's intervention. So that was Monday when we had the big sell-off, down again Tuesday. He had he capitulated on Wednesday. Big bounce yesterday, and we're following through today as well. Even though it's volume is lower, but obviously the day is far from over. So, if you're interested in reading volume, I strongly recommend a lady called Anna Cooling. Look up Anna Cooling, Anna Cooling. She's wrote some great books. She probably wrote the best introduction to forex trading over the last 10 years. It was very, very well put together, very simple but effective and very, very useful. Anna Cooling. And she's a big volumist, and obviously she was the first person that brought me to the attention of PVOCs and SMC type trading, and she's a big volumist. She's always done that way, and she's her and her husband David run a really good website as well. So if you're interested in finding out more about volume, Sabia and everybody else, have a look at Anna Cooling's site. So, but yeah, volume is a key indicator. It can't be hidden when it's correct. The thing about derived markets, these derivative markets, is these volumes are a derivative of the actual price action as well. So they're not the actual real volume, they're derived. So they can be a little bit manipulated is the wrong word, but they can be a bit massaged from the liquidity provider. So as with anything, treat everything with a pinch of salt and trade what you can see in front of you. Trade the spread that you can see on the broker that you're trading with. Trade the volume indicators that the broker that you're trading with is sending you. If you're not happy with it, have a look at the broker. Thousands, hundreds of brokers. Certainly hundreds of brokers out there. And find one that fits you, is best for your time frame, best for the thing that you're trading. Again, Sabia Hamza, I don't know what you're trading, but find what works for you. Whether it's the Nasdaq using Heikin-Ashi candles and volume, or it's the gold or forex markets trading simple old price actions. So find what works for you, I would say. But anyway, mental age always below actual. Always, that's an interesting comment. I'm not quite sure what that means, but anyway, let's crack on. What was I doing? Let's go back to my standard charts, or parabolic, Bollinger Band, and stochastics. Where were we? The stock market bounce continues. Dollar remains weak. All-time highs for metals this week and today. In fact, not only this week but today. And crypto continues to wane down. So I was going to check if the dollar had moved. US. Let's look at the euro. Actually, let's have a look at the euro dollar crosses if they've changed. Let's go back to the euro on that. Better than expected there. So the rally in the euro sort of cooled. There we are. So that's the 3 o'clock, I'm guessing. Yeah, there's the 3 o'clock post. The data out of the University of Michigan took us to 117.50, and then the selling started. And we're now at 117.47. So 117.50 has been our high of the day, I'm guessing. Not quite, interestingly. Where did we start the day? Started the day. We're open here. So that's our, so we're shy of our high. The high of the day is 117.54. So only 4 pips higher. But the main data of the US is all out today, 117.51. And then we've turned to the downside. But here, again, this has worked out quite nicely. So a big touch of the outside of the Bollinger Band. We're now looking for a turn. Remember how we use this strategy? I might do some webinars in February about how to use these strategies that I share with you. Any more comments? No. So there's the touch of the Bollinger Band. We're looking for a cross of the stochastics. That's happened. We can see it's happened there, but we wouldn't have got on that candle. We'd have actually got filled on that candle there. So this would have gone long here. Again, this one's played out quite nicely because we've been trending quite nicely. We've gone long there at 14.05. Target 1, if you wanted to take some of the profit off there at 17.40 from 17.38. So obviously it's only 5 minutes, so it's only 2 or 3 pips on that, but it could have finished with taking it there at 17.42. 4 or 5 pips. It's retraced, but our stop loss would have been down here to start off with. 3 candles behind our entry. Moved up. By the time we got here, stop loss would have been here. Up, and then down. So stop loss would have stayed down that down candle. 1, 2, because it's down 3. I wouldn't have pulled it up there. It's too aggressive. So I may have pulled it to the. So it may have been stopped out here on the 14.40 if I got too aggressive with it. But no, up, and then we've hit target 2. So target, the way this the system would have worked, there's target 1 there, a few pips, and then target 2. Second half of the trade closed as we've hit the outside of the Bollinger Band there at 17.50. So we got in at 17.38. We got out at 17.50 on a 5-minute time frame. Thank you very much. It's Friday afternoon, bish bosh, and there we see the cross again of the Bollinger Band, the stochastic. So I'd like to see that extend, see some fresh air like we had here moving up before we go short. But that's already, it's technically triggered short now, or at after the data 15.05. But whether we come back down or not, we'll see. But I say if you keep trading it after a nice strong move, we'll see if that moves down. But I say technically, I'd like to see that gap a bit wider. That's closed. Let's see how this candle closes. If we get a bit of a retrace after an initial move down, but see what we've done here. We've got a big spike on a small bodied candle, so we spiked to 17.51.50. So we could put your stop loss up at 17.52. Safely on the 5-minute and evented on that candle, but you can see the cross hasn't happened. We're still in the overbought here on the 5-minute, but can be overbought for a while. Let's see how we go down. So the initial move lower took us to 17.45.8. So that's our range at the moment. So we'd like to see a move lower. So again, this sounds crazy, but this is a little 5-minute thing. We can even short-term reaction there. That's the range since the last bit of data we've come out. So if we break back above 17.49.3, it might continue higher, even though we're in an overbought area. If we break below here and hold it on the next candle or so below the 17.49.7, we'd look for a continuation trade of this moving lower. But we'd like to see this, both the K and the D line, back into the breaking back down under the overbought line at 80. We're at 83 and 82.8 at the moment. So you can see we're sort of stuck together, and that can happen for a while. But you can see we moved down. The trend was still moving up. So although this was trending lower, this has kept us going up. So it hasn't made any money. And this is looking like it wants to push back up higher, doesn't it? Back to go and have another test of the 1750. And there we go again. So we're back over the 60, that initial leg. We're back over the key 61.8. So that might be looking to go long again, or not, certainly not trigger the short. I'd like to finish below the 38.2 to enter a short, and above the 61.8 to perhaps continue. But this would need to move up. But again, you can see that this is relatively high anyway. So there we are. See there, it's relative. Last time we was here this morning, and we spiked here as we were rallying. So that still looks like a potential short rather than long at the moment with all the data out. Anyway, again, we'll come back to that when we wrap up. Where are we? We're at 15.17. So I've been here the best part of an hour. Sorry about the hiccup, but there we are. So going into next week, where are we? Well, next week's key It's certainly earnings season. 3 of the big Mag 7 report next week. Apple, Meta, and Microsoft. I think they're all reporting on, is it Wednesday or Thursday? Yeah, they all report Wednesday. Microsoft, Meta, Tesla, and IBM report Wednesday after the market closes. MasterCard, Caterpillar, Apple, SAP in Germany, SAP, and Visa reporting Thursday. The ones I've picked out as we come to the end of the month. Amazon report the 2nd of February, and Nvidia the 7th of the big 7 report later in the month, the 25th of February, and Google also report the week after next. So Amazon and Google the 2nd and the 4th of February respectively, week after next. But next week it's Apple, Meta, and Microsoft. Microsoft and Meta and Tesla after the close on Wednesday the 28th. And Apple reporting earnings as ever on a Thursday the 29th next week. Obviously, the other big event of next week is the Fed and their announcement about the interest rate announcement for next week. Let's just do next week. There we are. Two. Let's just put on the big ones. Get rid of. So the major red events. That remember, these are events where you don't want to have trade. You can't open trades around 5 minutes before and 5 minutes after the event. So Wednesday and Thursday, the big days next week. Wednesday is kicks off with Australian inflation. Then we got the Bank of Canada at just ahead of 1500 hours, 14:45. We'll be live for that. No change expected in rates, 22.25%. Certainly no change from the Fed later in the evening at 1900 hours, 7 o'clock GMT. So very late for you guys in Asia, but I'm sure many of you are up. Interesting to see how Powell reacts and stages the press comms. Will he be asked about, is he going to stay on? I bet he is. And after this week's farce in the Arctic with the president, and obviously the situation with Lisa Cook, and obviously the situation we had the week ago, the previous weekend when the indictment was out against the Fed for their overspending from the Department of Justice, obviously directly driven by the president, no doubt. Well, I'm pretty sure that's been given direct instruction from the president. And PPI on Friday. So it's quite a significant week next week, although obviously none of these interest rates are going to change. It's what is said at the press conference, how the statement changed. Statement's very likely to remain very, very similar. Obviously still worrying about inflation, although the data this week has been quite encouraging. Those PMI data as we've just seen wasn't. However, labour market remains very robust. Those weekly claims this week, 200,000 again, only expected to be 202,000 next week. So the labour market perhaps isn't as weak as many are expecting. It's not having an impact on the economy about lots of things, but manufacturing still moribund, still in recession in the US. So another busy week to round out the month. Obviously, the other key thing, it is the last trading day next Friday of the month. So January next week as well. So key events all the time. Perhaps not as much volatility as we've seen this week with all the noise out of Davos. The president all over the place. But progress potentially in Russia and Ukraine doesn't look like it's happened, but they're having trilateral meetings have all gone to Abu Dhabi, the Russians, the Americans, and the Ukrainians. Obviously not Putin and Zelensky's yet, but Zelensky met Trump. Putin was met by Trump's son-in-law Kutcher and his chief envoy Witkoff, his golf buddy, becoming his chief negotiator, interestingly. So see if the president can start whittling on about having closed 9 wars off. What a bizarre bizarre world we're living in. Anyway, let's try and keep our senses and just look at the markets, do what we do best. So, Hamza, need capital chief, can I get free account? There's no giveaways at the moment, Hamza, but certainly keep your eyes peeled on Discord. There's always something happening on our Discord group. I can't give away accounts for you, but keep the announcement page sharp and with what's going on. There we are. Complete task gain XP to purchase rewards challenge. That's something on. Keep our social media feed first and foremost on your platform, and keep the where's the promotions? There we are. Active promotions. Keep these aware as well. So 26% off standard accounts. So we can just go to the website. You got 20% off, 26% off standard account. Let me just sign in. New challenge. So classic account are these. I don't want. I want two step account. So you get 26. Hang on, that's there we are. So 20% off new clients. So if you already used that once, you can only obviously use that once, but you can get that's just instant funding for a two-step account. There we are. Classic two-step account. Profit targets 5% and 8% in the second step. Drawdown on a daily basis 4%. You want to be trading in these sort of with this sort of discipline, guys. This is what keeps you in the business. Static drawdown as well. It's really quite useful. It doesn't change as you move into profit. So unlike some other accounts, but you can start from there we are, $79 for a 10,000 account. You really want to start with the bottom $55, and then you can confirm selection. Then if you put in that code, coupon code, what was it? 26. Where's it gone? There we go. It's the NY26. That's what it was. So that's still live. So you get 20 over 25%. So NY226. Apply, and there you go. It takes your $55. Coupon has expired. I don't know. I should know that, shouldn't I? I thought it was extended to the end of the month, 18th of January. I thought. Well, there we are. 18th of January. I thought it was extended to the end of 30 off for a PayFlex account. There we are, from just $7. $30, 30% off. Is that still? That was extended, wasn't it? Should we try 30 off for a PayFlex account? Let's have a look. Let's go back. So it's as simple as that. Evaluation. Hang on a minute. PayFlex accounts. That's not very. There we are. PayFlex. We're using TradeLock. We'll use 5,000. There you are. $10. Confirm selection. $10 gets you going. You've got a coupon. Coupon, was it on? What did you say it was? Only 4% target, so it's 30 off. So it gets you $7, my friend. 30 OFF. Apply. So there we go. $7. That's all you need, my friend. $7 gets you started. You got $5,000 equity account, but obviously the rules are a bit tighter, but give it a go. If you're comfortable trading, give it a go. Okay, take care, my friend, and everyone else. Have a great weekend, and get going. So you can get 5,000, Hamza. You can get $5,000 dollars of capital for $7. Give it a go, my friend. Go and find yourself for $7. Okay. Best of luck, everyone. Have a great weekend. Stay safe. Obviously, watch the news. Watch what Trump's got to say over the weekend. He's flown back to Washington overnight. He's probably got something to say later on today. I don't know what's actual if he's got anything scheduled today, but keep the news tight. And as I say, that was quite mixed data for the US earlier on today. So be good, take care, and I'll see you all on Monday. All the best, everyone. Take care. Bye bye.